Recording in progress.
Okay, so in accounting, at the beginning, you were recording transactions in numerous accounts. Okay, and then after that, you balance it and extract a trial balance. Now, the basis or the main purpose of financial accounting is to gather these financial data, process it, and make it meaningful. Okay, so that users of accounting information will be able to take decisions relying on the information provided by the financial accounting system. Now, as part of making the data meaningful, okay, we try sometimes to group similar items. So if you remember, when you are opening the T account to record transactions, you open sales account, you open capital, you open cash, you open bank, you open rent, insurance, what have you, a lot of them. If you pay attention, you see that if you try to group some of the accounts, you can tell that, for example, Kofi account, Ama account, Adwa account, XYZ Limited, rent, insurance, wages. You can see that, you can group some of them into expenses like the rent, wages, insurance. These are expenses. Now, when you come to the Kofi, Ama, AC Adwa, you would realize that some of them are debtors, some of them are creditors, right? So the whole idea about control account is trying to put similar items together so that you can have a summarized version of it. Okay. However, the focus will be on two main items or two main things. Okay. And these are your debtors and your creditors. So the control account we are going to look at here is looking at grouping all debtors account together and grouping all creditors account together. Okay, so that is the first information I want you to codify into your brain. Okay, so control account is basically about summarizing. Okay, what are we going to summarize? We want to summarize items that are similar to debtors and items that are similar to creditors. Okay, so let's read what we have on the screen. Prof. Sandra, I think you start, and then at a point, Frank would come and assist you along the line. Prof. Alexia is back, so she would also assist. So, Prof. Sandra, take it.
Self-balancing ledgers, control account. Control account is a master account prepared by summarizing all the individual accounts in a ledger. It is an account that is debited and credited with the total amount of all transactions which have been debited or credited to individual ledger accounts. It follows, therefore, that the balance on a control account should be equal to the sum of the balance on the individual ledger accounts. In summary, a control account is an account in which record is kept for the total value of similar but individual items.
Thank you very much.
Purpose or reason.
Okay, so pause there for me. Thank you very much. So the whole idea about control account is summarizing. Okay, we want to summarize the individual account in a particular ledger into one account. Okay, so let's revise our ledgers. If you remember, or in fact, it's not about if you remember. I know you know the ledgers that we have in financial accounting, and I want you to list them for me. In accounting, the books of account are day books and ledgers. Please, can we list the ledgers? The ledgers, or what we call the principal books of account. How many are they in the first place? The ledgers, how many are they? Oh, my professor, this one should be partial, no delay. How many ledgers do we have in accounting?
Sir, 5.
Thank you. 5 of them. So can we list the 5? So ledger number 1 is
sales ledger.
The sales ledger. Thank you, Prof. Frank. The sales ledger, that's the first one. And I want to believe you know what that ledger is used for. Okay, let's list them after we come and look at. So let me add one myself, the purchases ledger. Number 3, yes.
General ledger.
The general ledger. Last 2 to go.
Return inwards.
I'm sorry, Prof. Frank. Return inwards doesn't have a ledger. It has a day book, but doesn't have a ledger, right?
Cash book.
The cash book, thank you. And the final one. Prof. Alexia, come again.
The petty cash book.
No, not the petty cash book. The petty cash book is a day book, but it is not a ledger. Okay, let me ease
Private ledger.
Exactly, Prof. Sandra. Thank you very much. The private ledger. So these are the 5 ledgers we have in financial account. In fact, don't get confused. This is ideally when you look at the day books, we have the sales day book and it has a ledger, sales ledger. So if you are not careful, you'll be tempted to say, okay, we have return inwards day book, hence we should have a return inwards ledger. But no, we don't have a return inwards ledger. So these are the ledgers that we have. The sales ledger, the purchases ledger, general ledger, cash book, and the private ledger. Now, I want to believe you know what each of them is used for. So can we attempt that? The sales ledger, what is it used for?
So it is used to record the debtors.
Thank you very much. So this ledger would keep the debtors account. Now, this in simple man's term, when we say a ledger is a book like your notebook, right? When you open it, you see the T account drawn in there. So when you pick a notebook and it is written at the front of the book, sales ledger, it means when you open that notebook, you will see the T account of debtors like Kofi, Ama, KXY Limited, etc. Okay, so that is what it means. The purchases ledger will keep that of the creditors, right? Or our suppliers. The general ledger, I'll come to that. The cash book would keep the cash account and the bank account. So in the cash book, you have only these 2 accounts, the cash account and the bank account. Okay, but we fix them together into the various forms like this, be it the 2-column or 3-column or single column. But the cash book, when you open a cash book, you see the cash account and the bank account. The private ledger also has the capital account and drawings account. These are the 2 accounts that the private ledger also keeps. Okay, it's recording transactions with the owner. The general ledger, the mother of all ledgers, will keep all the other accounts. Okay, so if you remove debtors, creditors, cash account, bank account, capital account, and drawings, all the other accounts you know in financial accounting, you see them in this book called the general ledger, like rent. So all the expenses, rent, salaries, return inwards, carriage inwards, carriage outwards, all those, discount allowed, discount received, all those things are in the general ledger. Your fixed assets like plant and machine, building, land, whatever, all of them are in your general ledger. Your sales account is in the general ledger. Students get confused when they hear sales account, they want to associate it with the sales ledger. No, the sales ledger keeps debtors, and sales account is not a debtor. Sales is a revenue, so it's in the general ledger. Same for purchases account. Okay, good. So having revised this, the point I want to make is that if you are looking at a control account, you can prepare a control account to summarize items in a particular ledger. Now, if you look at these ledgers, okay, the first three are the ledgers that are densely populated. When I say densely populated, it means when you open the book, you see a lot of T accounts. Because the last two, the cash book, you only have cash account and bank account. The private ledger, you only have capital and loans. But look at the general ledger. You have all your assets, all your, if I let me be specific, all your assets except debtors, because debtors is in the civils. Sorry, excuse me. Okay. And then all your liabilities except creditors, they are all in this ledger. So when you open the general ledger, in fact, it is like an encyclopedia. It has a lot of accounts in there. So control account tries to group items that are similar. So we can have a control account for only expenses. We can have a control account for only income or revenue. Okay. But at your level, we don't pay attention to the general ledger. We pay attention to the sales ledger and the purchases ledger. Okay. And just to establish the point, when you open a sales ledger, in fact, you will see numerous debtors account. Imagine if a company has about 100 debtors, then each of them would have their account in this sales ledger. So if somebody comes to your business and is asking for your debtors, and you give him or her the sales ledger, you can imagine the time he or she would have to take to go through the 100 debtors, right? But if you have summarized them into one account, the person can just make reference to that one account and probably pick out, maybe the person is looking for your total debtors figure, right? So let's go back to the note. Well, let's keep the purpose and limitation and look at the types of control account we'll look at. So Prof. Alexia, can you read the types of control accounts?
Someone.
Yes.
Someone.
Yeah, I can hear you, so go ahead.
Mr. Moore.
Yeah, Prof. Alexia, I can hear you. Can you hear me?
Mr. Moore.
Prof. Alexia, I can hear you clear. Prof. Sandra, can you hear her?
Sir, please. Please, your voice.
Oh, my voice was dangling.
Yes, please.
Is it okay now?
Yes, please.
Okay, so I was asking you to read the types of control account for us.
Okay. So the types of control account. Control accounts could be kept for stock, expenses, income, assets, etc. However, the two main types of control accounts are 1. Debtors control account, and 2. Creditors control account. Debtors control account is also known as sales ledger control account or receivable control account. It is the summary of all individual debtors accounts in the sales ledger. The following are some of the items appearing in the sales ledger control account and the sources to get them. So should I continue reading? So item and so credit sales, the sales journal, dishonored check, cash book, interest on overdue debts, journal, cash refund to debtors, cash book, cash or check received from debtors, cash book, discounts allowed, cash book, returns inwards journal, bad debts written off, journal, bill receivable, bill day book, contra entry to bracket set off, journal, transfers or balances, journal.
Okay. Okay, so do the creditors control account for me, and then I'll step in. Please continue with the creditors control account as is shown here. Okay, so Prof. Alexia, can you continue with the creditors control account for me? Yeah. Prof, can you hear me?
Somewhat.
Yeah, can you continue for me?
Account is also known as purchases ledger control account or payables control.
Okay, Prof. Alexia, are you done with the reading? Or maybe you can retake it.
Oh, please.
Yeah, retake it for me.
So please, it's not yet showing on the screen.
Okay.
Creditors control account is also known as purchases ledger control account or payables control account. It is the summary of all individual creditors account in the purchases ledger. The following are some of the items appearing in the purchases ledger control account and the sources together. So we have the item and the source then. Purchase returns outward journal. Cash or check paid to creditors, cash book. Discount received, cash book. Bill payable, bills day book. Pawn entry into bracket set off, journal. Credit purchases journal. Cash refund from suppliers, cash book. Transfer.
Okay. Thank you very, very much. So let's get some basic point into our note. So the definition of a control account is an account prepared to summarize accounts in a ledger. That's a simple definition I can give you. It is prepared to summarize accounts in a particular ledger. Now, the two types of control accounts are the debtors control account. So this account is going to summarize our debtors or the debtors of a business. Now, in reading the notes, you realize that it is also sometimes referred to as the sales ledger control account, simply because the sales ledger keeps debtors account, right? So debtors control account, or you can refer to it as sales ledger control account, or sometimes receivables control account, because another name for debtors is receivables. So when you see receivables control account, we are referring to the debtors control account. And the second one is the creditors control account, which is also referred to as the purchases ledger control account, or sometimes you see payable control account, because our creditors are also referred to as payables. Okay, trade payables. Okay. Now, one thing or we need to grasp to be able to be very successful in this topic is that we need to know the items to put in these two types of control account. Okay. How do you know the items? You know the items by looking at, you see, in a business transactions, you should be able to identify transactions that affect debtors and transactions that affect creditors. Okay, so that is what was given in the notes by way of the items to prepare these accounts. So let's familiarize ourselves with that of the debtors. Okay, and that's what we have here. And it's very important for you to know the source from which you get that item or that information. The first one you have here is your credit sales. Credit sales. And I think I don't need to stress the point that a business gets debtors as a result of credit sales. Because when you sell to customers on credits, that is the point they become your debtors. So credit sales is one of the items that affect debtors. Okay. However, let me put in this first one. Okay.